I spent 9 years working at Google, the majority of the time working on the Chrome browser. So if you guys are Chrome users, you probably use features that I worked on. But then late last year, I moved over to Reddit, where I'm leading up what we call the knowledge pillar, working with the teams that work on search and ranking and discovery, basically all of the parts where we use machine learning to do clever things at Reddit. But that's my day job, and I do my day job all day. So I wanted to spend today talking to you guys about something that I just happen to think is really fascinating, which is Bitcoin. So my academic background is at the intersection of economics and computer science. I studied game theoretic AI at Brown. And I feel about Bitcoin the way that a physics student would feel about a perpetual motion machine. When I first learned about it, I confidently assured the person who described it to me that it was impossible and that they were wrong. And now that I actually understand how it works, I'm simultaneously flabbergasted and in love with it. It's incredibly, incredibly cool. So if nothing else tonight, I hope I can leave you with some sort of impression about how neat an idea Bitcoin is and how fascinating it is that it works at all. Okay, so first of all, what is Bitcoin? Obviously, it's some sort of money thing. People are using it to get rich or to buy drugs off of the internet or to gamble or some other things. Who knows? But what actually is Bitcoin? Why is it interesting enough to get a whole bunch of you guys into a room to talk with me about it? Well, Bitcoin is a digital currency, which I'm sure is a phrase you've already heard, so it's not news. It's not a particularly interesting way to describe Bitcoin because to a first approximation, all currency is digital. Those of you who are working likely aren't getting gold bars or paper slips in the mail. You're probably getting zeros and ones on a server somewhere that you have a bank account with. So the vast majority of US dollars are digital currency already. So what's interesting about Bitcoin as digital currency that makes it new and worth paying attention to? Well, the simplest way to think about it is that Bitcoin is a trustless, permissionless digital currency. It's trustless in that if I give you a Bitcoin, you don't have to take anyone's word for it, including my own, that you have it. You can verify it for yourself. And it's permissionless in the sense that no one can stop you from accepting that Bitcoin. No one can prevent you from receiving payment from me if you're so inclined. And it turns out that we actually already have a pretty good analog for this kind of money in today's world, which is physical cash. Now, if I give you a $20 bill, you don't need anyone's permission to take it from me. And you don't need, you don't need to trust me to know whether or not you have it. You can just look at it and be like, now I have a $20 bill. So digital currency, digital US dollars don't have this property. With digital dollars, you have to trust that the bank has your 20, and you have to receive permission from the bank to spend it. And there's all sorts of complicated rules about how you can and can't move your money. And that's the difference between Bitcoin and the US dollar at its most basic level, is that Bitcoin is digital cash. There are other analogies that all have sort of advantages and disadvantages. You can talk about it as digital gold, digital real estate, digital bearer bonds. The important thing to understand is that Bitcoin is the very first scarce digital resource. It's the first digital good that you can't make more of easily. And that's really neat. It's really unusual. Everything else that's interesting and cool that happens online is taking advantage of how easy it is to propagate information and how cheap. It actually is leveraging the power of copying data. But we haven't been able to do anything online that really fundamentally pivoted on scarcity. And you can actually see in the early design of the internet, they have error codes that were designed to be exchanges that were requesting payment, and we just never actually got around to figuring out how to do payment baked into the internet. So Bitcoin is this sort of new thing, this new way of creating and operating as money. And there's a rich and interesting debate about whether or not Bitcoin is good money and how good of money it might be. But first, I want to table that question and just focus on kind of the basic stakes of being a currency. What do you have to do in order to be money at all? And the answer is you have to accomplish two things. Only you can spend your money, and you can spend your money only once. Anything that can accomplish these two things can be money. Not necessarily good money, but it can function as money. If you can't achieve those two things, then it won't work as money. And this is why, for example, hilarious GIFs don't work well as money. Because even though they're great and they work well on the internet, you can't guarantee that they're only spent once. If I send you a hilarious GIF, I can also send you the same hilarious GIF. I'm spending my hilarious GIFs all over the place. No ability to create scarcity. Okay, so the way that Bitcoin achieves this is, oh, wrong direction, is perhaps my favorite thing about the whole Bitcoin ecosystem, which is that, oh, sorry, I guess I'll start with the easy part. Getting ahead of myself. I'm so excited about the favorite part. The only U part is relatively straightforward. So Bitcoin is stored in what are called wallets. Wallets are software that manage addresses. Every address comes in a pair. The pair is a public and private key. The key is a very long number that you're not really meant to remember, that you're meant to store digitally or write down in various ways. This is, elegant, but it's essentially the same system that's powering all of the cryptography that makes anything secure on the internet. And you can think of basically the public key as being analogous to an email address. You can share your public key with anyone. Anyone who has your public key can send you money. And you can think of your private key as being somewhat analogous to a password. You use your private key to prove you have the ability to spend money from the public key address. I keep going backwards on this. The only once part is much trickier. And this is really where Bitcoin is special and unique. Banks, when they're managing their digital currency, use a very old piece of technology to solve this problem. And the technology is called a ledger. And it is literally just a list of transactions and the order they happened in and the account balances. So when you write a check for $20 to try and spend the $20 in your bank account, the bank looks at it, verifies that you have $20 in your account, and then says, yep, that's fine, writes down that you spent it, deducts $20 from your account. If you tried to double spend your $20, if I tried to send a check for 20 to you and a check for 20 to you, the bank would decide which one of those checks happened first. That one would clear. They would deduct $20 from me. And then the second one would bounce because I no longer had $20 in my account. And it's the ledger that they're using to determine whether or not I actually have money in my account. Now, at its base level, this is actually a time-stamping problem. It's about deciding which check happened first. Neither check is fraudulent until the other one has happened, right? So this is actually an example of a really old problem in computer science, at least as old as problems in computer science get. In cryptocurrency circles, it's called the double spend problem. In older circles, it's called the Byzantine generals problem. It's fundamentally a problem of coordination without trust. If I don't trust you, and you don't trust me, and we don't trust any of the people that are managing our network so that we can communicate with each other, how can we come to agree on anything together? The way that the bank solves that is they just say, everybody has to trust me. I'm the bank. But Bitcoin doesn't actually have anyone operating a central ledger. So if there's no central ledger being operated, or if there's no central authority that is operating a ledger, rather, how is it that we're actually guaranteeing that Bitcoins aren't spent twice? And now we get to my favorite part about Bitcoin, which is that Bitcoins don't exist. There's no such thing as a Bitcoin. You don't have a Bitcoin. I don't have any Bitcoin. Nobody who owns any Bitcoin has a Bitcoin because there's no such thing as a Bitcoin. There's nothing on your computer that represents a Bitcoin. There's nothing on any computers that represent a Bitcoin. There's only one thing, and that thing is the blockchain. The blockchain is a ledger. It's a shared ledger that everyone who uses Bitcoin has access to. And it lists all the transactions that have taken place on the Bitcoin ecosystem. And by implication, it lists all of the account balances in the Bitcoin ecosystem. And anyone can download the blockchain, which means anyone can check the ledger for themselves. So rather than relying on the bank to keep the ledger honestly, we can download the ledger for ourselves and verify it without trusting anyone. And that's what makes Bitcoin trustless, the fact that anyone can download the blockchain. So the folks who are updating and maintaining the blockchain are a group of people known as Bitcoin miners. And what Bitcoin miners are doing is essentially accounting. They're gathering up all of the transactions, they're grouping them in blocks, and then they're embedding those blocks into the blockchain. Now, there's no prerequisites to becoming a miner. Anyone can become a miner. All of you could go home tonight and decide to start mining Bitcoin. I encourage you not to, unless you have some sort of access to free hardware and subsidized electricity. It's a very competitive market. It no longer makes sense to do except as a hobby. As a hobby, it's really fun. But you can. And it's very important conceptually that you can, because it means that no one can stop anyone from becoming a miner, which means that no miners can enforce any rules on the overall network, which means if one miner doesn't want to process your transaction, you can just go to the next one. And if none of the miners want to process your transaction, you can become a miner yourself and just mine your own transactions. Now, in practice, we don't really have to do that, but the threat that we could creates a competitive market that basically incentivizes miners to accept all transactions. And the fact that anyone can become a miner and how that encourages miners to accept all transactions is why Bitcoin is permissionless. Nobody can stop. There will be tons of questions at the end. I'm excited about it. No one can stop you from spending your money on the Bitcoin network because no one can stop you from becoming a miner and processing the transaction yourself without needing any permission from anyone. Okay, so I just told you the blockchain is how we're keeping everything consistent within the ecosystem. And I just told you the Bitcoin miners are the people keeping the blockchain honest. And then I told you anybody can become a miner. So what do we do about evil miners? Well, this is my second favorite thing about the Bitcoin ecosystem, which is that updating the blockchain is pointlessly expensive. It is deliberately, uselessly wasteful. And that's on purpose. And the reason that you do that is because you want it to be expensive to update the blockchain, and then you pay the people who update the blockchain in Bitcoin. So what you're effectively doing is you're forcing anyone who wants to participate in the Bitcoin ecosystem as a miner to use their electricity and their computational resources to buy Bitcoin. And the system automatically scales the difficulty up and down to make sure that the amount of electricity and computational resources is representative of how much demand there is for Bitcoin. Because if it was less than that, people would add more mining to the network, and it would naturally increase the difficulty level. Okay, so this is going to be the most technical slide in the talk. Bear with me. Once we're past this, we'll be back to the silly lines again. This is what the blockchain conceptually looks like. Transactions are grouped together in blocks. Blocks are produced statistically every 10 minutes. It's a very volatile process, so it's not necessarily every 10 minutes. Each block contains what's called a hash of the previous block. A hash function is a function that takes any body of data and then maps it to a number. And in this case, we're talking about specifically cryptographic hashes. What that means is that you can't go backwards. So you can take the body of data and go to the number. That's very easy. But going from the number back to the original body of data, very hard. So we include the number, the hash of the previous block, because it basically forces you to create the new block after the old block was created. It's not possible to create blocks in secret and then unleash them all on the network all at once. You have to create whatever block is coming next after the most recent block was already released. In addition to the transactions in that particular block and the hash of the previous block, there's a special number in every block called the nonce. And the nonce is a meaningless number. The only purpose of the nonce is that the nonce is required in order to make changes to the actual hash. So the body of data, as you change it, it changes the output number. So you take this one random number and you basically use it to salt it. So you can sort of change what the output number will be. The way that Bitcoin controls the difficulty of the system is by demanding a number of leading zeros in that hash number. So I know that's a really confusing series of sentences. The way to think about it is this. To figure out whether or not your block is valid requires you to pick a number and then check whether that number works. There's no faster way to do it than guess and check. That's what cryptographic hashing provides you. So what miners are actually doing in practice is they're listening to the network for all of the transactions that have happened recently. They're bundling them all up, and then they're saying, is it 1? No. Is it 2? No. Is it 3? No. Is it 4? No. And they're just guessing numbers over and over and over again until they get one that has the right number of leading zeros, and then they're running out to the network and saying, I found it. And everybody else verifies that they found it, and then everybody's like, all right, you win, you found it. We'll start trying to find the next one. So what's happening is all of these computational resources are being spent competing to be the first one to guess the right random number. And that's what I mean when I say it's deliberately pointlessly expensive. The machines that people use to mine Bitcoin are specialized hardware that exist only to do this exact process. If for some reason we decided to change how Bitcoin worked, they would be literally worthless. They are not general purpose computers. The reason that miners are willing to do this extremely Rube Goldberg-y nonsense of guessing random numbers is because the person who finds the block, or the organization that finds the block, has the right to sign a special transaction called a Coinbase transaction that pays them an amount of Bitcoin and all of the transaction fees from everybody whose transaction was included in that block. So you're wasting electricity and computation resources, but you're being paid Bitcoin to do it, and that's why they're incentivized to do it. The block reward is, you may have heard some confusing things about there being only 21 million Bitcoin, but there also being Bitcoin created all the time by miners. This is why. The block reward is the Bitcoin that's quote unquote created. It's created at a rate that's controlled by the system so that it is being created at a decreasing rate. So it used to be 50 per block, then it was 25 for 4 years. These days it's 12.5 Bitcoins per block plus whatever the transaction fees are. Eventually that will peter off into zero, and there will be just shy of 21 million Bitcoin in existence ever. So the reason that this is interesting to do is because by forcing the miners to buy Bitcoin, you force them to share incentive with the Bitcoin ecosystem. You could, if you were a sufficiently motivated miner, buy a whole bunch of computers, mine a whole bunch of malicious blocks, and try and do some negative things to the system, but you would be buying Bitcoin and then attacking Bitcoin, so you would be attacking your own wealth. And that's the kind of trick that Satoshi did in order to create this ecosystem. He created a situation where the people who were given the opportunity to participate were incentivized to do so honestly. So as long as at least half of all the participants in the ecosystem are greedy, not necessarily good people, but just greedy, then Bitcoin will continue to operate the way it's intended. All right, you were all very brave, and now we can go back to talking at a high level. So that's how Bitcoin is money. That's how it works in its most basic sense. That's how it works in its most basic sense. But you know, the reason that we're all here is not because Bitcoin technically works. We're here because some people think it might be a really good form of money. And here are the properties that I think Bitcoin has that make it interesting to think about as money in the abstract. First of all, Bitcoin cannot be counterfeited. As long as you downloaded the blockchain correctly, you will know whether or not someone has paid you a Bitcoin. It is not possible to give you a fake Bitcoin. It is possible to give you a thing that is not a Bitcoin and tell you it's a Bitcoin. In fact, there was a dude arrested in New York City recently for selling people, and this is not a joke, Chuck E. Cheese tokens and telling them it was Bitcoin. So you can be tricked into buying things that are not Bitcoin, but if you know what you're doing, you can absolutely tell for sure whether or not you've been given a Bitcoin. And that's not true of very many things. It's certainly not true of paper dollars. Like, there are extremely sophisticated counterfeits out there that you or I would have no ability to tell the difference between. And in fact, actually, a month or two ago, there was a bit of a controversy in Canada because someone had been sold a gold bar by a jewelers association, and then when they had taken it back to the lab and tested it, they had found it was something else entirely. I don't know, a different, cheaper metal that had been plated to look like a gold bar. If I handed you a gold bar right now, it would be very difficult for you to tell with confidence that it was actually a gold bar. That kind of thing requires a fair amount of expertise and maybe some specific tools. That's not true of Bitcoin. Your smartphone could tell you with total 100% confidence whether I had given you a Bitcoin, which makes Bitcoin really interesting in parts of the world where counterfeiting is a real problem. Bitcoin can't be seized. No one can take your Bitcoin from you. Now, that doesn't mean you can't be robbed. Obviously, you can still be robbed. But what can't happen is you can't have an authority figure declare that your account is no longer valid. Now, if you get arrested for something, or if you are in sort of violation of various tax laws, then the government can phone up your bank or all of the banks and say, hey, this money doesn't count anymore, just freeze it. And we'll let you know when it becomes real money again. And they will, and you won't have access to your money. And that's not just true of US, because the US finance system is so large, they actually have similar amounts of influence globally. So for most money in the world, it is possible for you to run afoul of the law and for that money to be seized. That's not possible in Bitcoin. As long as you have control of the private key, you have control of the money. There is no authority that anyone can call up to freeze your account. Similarly, and kind of the flip side of this, is Bitcoin can't be censored. Now, there's a lot of businesses that operate in kind of gray areas that really struggle with banking. These are things like firearms, the sex trade, marijuana, things that the government technically hasn't necessarily always outlawed, but isn't very fond of. And there are policies in place that basically say, banks, don't get too cozy with these industries because then we'll use other tools in order to make your life miserable. Which means it's very challenging, for example, for a new marijuana business to get some of the things that we're used to, like a loan or the ability to cash in all of their cash into something safer than just like a lockbox. In Bitcoin, that situation doesn't apply. You can spend your money to any business that you like. You can receive money from any business that you care to. Anyone can send anyone money. No one gets to decide whether or not that form of transaction is legitimate, which makes Bitcoin more flexible than most forms of money. And an interesting way to observe this in practice is to look at the fact that Bitcoin costs different amounts of money in different parts of the world. Bitcoin is a global network. There's no concept of having a Bitcoin from Japan or a Bitcoin from Russia or a Bitcoin from America. Bitcoin is just Bitcoin. The reason that it is priced differently in different parts of the world is because money cannot flow smoothly in different parts of the world. So it's actually the money itself that's changing price, and it's Bitcoin that's being held constant, which is interesting. And the final and the most famous and probably the most important thing that underwrites Bitcoin as an interesting monetary experiment is that Bitcoin can't be inflated. There is 21 million Bitcoin. There will only ever be 21 million Bitcoin. The Genesis block actually has embedded in it a headline from the era about the UK considering a second bailout for banks. And in many ways, Satoshi viewed Bitcoin as a statement against monetary policies that involved printing money in order to solve various issues. He wanted money to be hard money in the sense of gold. So he actually created Bitcoin, which is harder than gold, because gold is actually responsive to the price of gold. So if the price of gold goes up, then a bunch of people who have gold jewelry sitting around will liquidate it, and a bunch of people who have gold mines that weren't previously worth mining will suddenly start mining because the price of gold has made it economical. So the price of gold isn't very responsive, but it's not perfectly inelastic. It can grow over time. And in fact, you can see there have been precious metals that have gone from being precious to being very unimportant. In the era of Napoleon, he had the fanciest silverware in his army. It was aluminum. It was very, very fancy metal. And then we developed a technique to use electricity to extract aluminum very cheaply, and now we think of aluminum as a trash metal. But that didn't happen because of an intrinsic property of aluminum. That happened because aluminum responded to the market. So precious metals are subject to this same sort of ebb and flow as anything else. Bitcoin is unique in that the math guarantees the structure of the supply. So it is perfectly inelastic no matter what the price does. There are people who view that as a negative thing from a macroeconomic level, but from a personal savings level, it gives you a lot of stability about knowing what it is that you own, or at least what share of it. But I actually think Bitcoin as money is not a very interesting way to think about Bitcoin. And I want to encourage you to think about it as being just an example of what this tool can do. What Bitcoin has done is it has given us a shared notion of truth, something that is totally neutral, and that's really unusual. So I'm sure many of you have heard the phrase, history is written by the winners. And if any of you have actually studied any history, you know that that is a literal truth. We don't know very much about the past in an objective way. Almost all of what we know is mediated through people who told us what they saw, or maybe told us what someone told them that they saw, which means it's not necessarily perfectly reliable. Some of those people are liars. Some of them are just wrong. Some of them believed very much the things they were telling you, but were sort of very non-specific, and now we've just lost a bunch of detail and it's gone. There was no notion of an ability to write the truth in a way that it would be received by the future that isn't sort of mediated through some kind of trusted authority, some sort of monk who's sitting and writing down all of the stories, or later some sort of university who's ascribed which form of history we're going to treat as most true. But that's not true anymore. The blockchain is the first and, as far as I know, the only tool that we've ever developed that allow us to have a notion of historical record that nobody owns and that nobody controls. Whether or not you think Bitcoin is good money, whether or not you think it's an interesting experiment, it is objectively true that since its inception, Bitcoin has faithfully recorded every Bitcoin transaction that's taken place on the network. If you want to go back and understand who spent what at what times, you can, and it's an objectively known truth. And what's more, you can embed other information in the blockchain, and people have done that too. They've embedded the white paper, they've embedded messages to each other. I personally embedded a hash of a wedding photo of mine and a little note to my wife that I would always love her because the blockchain is forever. So there's like this possibility of inscribing things on this data structure in a way that is immutable, that cannot be changed, that will be true forever. And that means that we have a new notion of history that we've never had as a society, that's never existed before. And if it works out to continue to operate the way that it has since 2009, if we work out to be able to use that tool, we may find that our grandchildren's grandchildren look back on this as the dawn of recorded history. The first time that it was ever possible to really know for sure something that had happened in the past in an objective and neutral way. And I think that's really cool, even if Bitcoin doesn't turn out to be the money of the future. Okay, and with that, I'll turn it over to some Q&A. Thank you. I'm very efficient.
So with the business about guessing the magic number, that is mining. When you hear about
Yes, that is the thing people are doing when they talk about mining. Yep.
So I just heard some story that China shut down Bitcoin mining because it sucked the equivalent electricity of 3 nuclear reactors, like 5 gigawatts or something like that. I mean, that's what they were doing. He's just trying to guess that magic number.
Yeah, everybody who's mining is trying to guess that magic number. I don't know the exact numbers, but it is a lot of energy that's consumed that way. China did just crack down on it a little bit. It's very complicated to understand the regulatory stance of China. It's deliberately vague and shifting, so it's not even necessarily the case that you could have a crisply true answer. China spent a lot of money investing in subsidizing the power supply. The goal of that was to try and stimulate economic growth. And there's concern about whether or not that sort of intended subsidy is being siphoned off into this sort of alternate path, which is the source of consternation. I'd be very surprised if they actually crack down super aggressively, because they have a real advantage in it, and it's like kind of a potent thing in the event that Bitcoin turns out to matter, to be the center of Bitcoin mining. So my guess is that they're looking to control it, not to completely oust it. I'm also partially basing that belief on the fact that they've like banned it every other month for like the last 2 years. So at this point, I'm getting kind of like cried wolf about it.
So how many Bitcoins exist today, and what guarantees that the cap of 21 million Bitcoins will that decision change in the future?
Yeah, totally. So if I remember correctly, I think we're at around 18 million that have been created today, give or take. The more interesting question, of course, is why? How can we be sure? Like, won't the authorities get together and be like, wouldn't it be nice if there was 22 million and we got most of them? And the answer is there's nobody who can make that choice. There's no authority figure who can step out and say, like, I'm going to change it, now it's 22. The network is enforced by everyone who participates in it, and everyone who participates in it is creating the rules that they consider to be legitimate. So if you could wave a magic wand and make everybody believe that the one true Bitcoin was actually the 22 million one, then you could do it. But unless you can convince everyone to adopt that new policy along with you, then you're going to be off by yourself mining 22 million Bitcoin, and everybody else is going to be using the original one, because that's the one that has all the economic weight behind it. So you have to find a way, if you want to change Bitcoin, to convince the majority of participants in the ecosystem, and I say majority by sort of wealth weighted as opposed to just number of bodies, but like the majority of the capital invested in the ecosystem has to believe that whatever your vision of Bitcoin is better than the one that they had before. Otherwise, they just won't accept it, and if they don't accept it, then you're trading tokens by yourself. You actually can create whatever version of Bitcoin you want, and you can market it. And in fact, that's what all altcoins are. I mean, some of them have more complicated technological switches, but at a fundamental level, they're all sort of engaged in this, like, what if it worked this way? Wouldn't that be better philosophical debate? And if you can convince enough people, then people will adopt it. But there's no way to change what Bitcoin is. There's only ways to change how many people care about it, if that makes sense. So like with a stock, there's all these sort of like well understood signals that you could use to evaluate the health of the stock. When you're evaluating a cryptocurrency, none of those signals apply. Like, what are we even buying? Are we all just playing a game? Maybe is the true answer. Like, this is very new, and none of the sort of like infrastructure of understanding that have accrued around stocks has accrued around Bitcoin. That doesn't necessarily mean it's impossible, but it just means it hasn't happened in 9 years. Probably 9 years into the first stock being created, it would have looked very primitive to us as well. I think we don't yet have very good systems for understanding the fundamentals of Bitcoin. I also would posit that we likely never will. And the reason that I say that is because there's not really any good system for understanding the fundamentals of precious metals either, or at least of gold. And so you can decide that you have a belief that people will continue to value gold because they have for a long period of time, and that's not crazy, but there isn't like an earnings chart that you can project out and then make some sort of a Black-Scholes calculation like you can for a stock. So with Bitcoin and with other cryptocurrencies, I think it's easier to think of it as a commodity than as a stock. But even that analogy is imperfect. What it is a brand new asset class. And probably, if it works out to matter, we will invent systems for describing its value. And there are people attempting to do that today, but it's all armchair quarterbacking. It's not real yet. It's just people guessing.
One thing that I'm still confused is how is it that Bitcoin, it's increasing by the value?
Like, why is the price going up?
Yeah, the price going up, all these companies saying like, oh, invest. But like, how does that?
Yeah, Well, so you can think of it this way. There's only 21 million Bitcoin. That means that if every millionaire in the world wanted to own a Bitcoin, it would be too bad because there's more millionaires in the world than there are Bitcoin. So the price is going up because there's more money trying to get into the system than there is trying to get out at a macro level. And if that continues to happen, then the price will continue to go up. It's hard to say whether that will continue to happen because it's kind of this game about guessing what someone will guess. It's kind of unstable. So, if we imagine that the whole world was in this room, then we could know the price of Bitcoin by just all sitting here and like shouting out what we thought the value of Bitcoin was, and eventually we'd all kind of like settle on something that we all agreed to. But in the course of figuring that out, some of us would be like, I don't know, I think it's worthless, I think it's like $1, and somebody else would be like, it's amazing, it's $1 million a coin, and people who weren't sure would be like looking between the two of them and like not knowing what to do, and that whipsawing of like, I don't know what the price really is, that's what's happening to the price, is we really don't know what it's worth. And the folks who are telling you to invest, you should be cautious because there's a lot of incentive bias, and they aren't necessarily trying to like exploit you, but if you're excited about Bitcoin and you think you'll make money on it, and you think you'll make more money if other people join you, and you think they'll make money, there's all these sort of like reasons to get hyped that like can get people overexcited, and I would generally encourage you to be very cautious. I would also encourage you to like, you probably, if you are thinking about investing in Bitcoin, you probably need a lot less than you think. So to put some concrete numbers on that, so there's 21 million Bitcoin. 21 million sounds like a large number because we don't really deal with numbers like million very often, but it's actually a very, very small number. So if you assume that everyone in the world wanted Bitcoin and that we were going to split all 21 million of the Bitcoin evenly amongst everyone and that we haven't lost any of the Bitcoin, all of which is not true, then everyone in the world would get, I think, as of today, like $36 or $37 worth of Bitcoin, something like that. It's not very much money. So if you have more than $36 worth of Bitcoin, you have more Bitcoin than most people will ever have by definition. Now, uniform distribution is not realistic. We know that's not how economic systems work. Typically, economic systems have a bit more of an 80-20 kind of a Pareto distribution. So what this is this is taking three different possible views about what inequality might look like in a Bitcoin world. On the left, this is projecting out from the inequality curve that you see in income in Japan, which has relatively low inequality. In the middle is projected out from America's inequality curve, which is pretty similar to the global inequality curve. And then out here on the right is the inequality curve in Zimbabwe, which has very severe inequality. So if you want to be in the top 1% in a world where Bitcoin turns out to matter, if you think Bitcoin is going to take over the world and you just want to make sure you're part of the 1% in the future, then you need, assuming that you think the world is going to look similarly unequal to the way that it does today, then you need 0.026 of a Bitcoin. You do not need to buy a whole Bitcoin. The vast majority of people who get excited about Bitcoin buy more than they need. By today's prices, that would look like this in terms of US dollars. That was refreshed as of this morning. Bitcoin prices change a lot, so things change a little bit. But loosely speaking, the reason that I point this out is because I think most people who get excited overinvest. I don't think you need a lot of Bitcoin in order to have a ticket to the moon, and I don't think you should day trade because it's gambling, even if Bitcoin is an amazing technology that takes over the world. So there's a lot of people who get really excited about the space and then get excited about gambling and then kind of blend the two together and they're like, oh, I can definitely predict the market, or oh, I know what the next big coin is going to be. I strongly encourage you guys not to get caught up in that. People lose a lot of money that way. People lose a lot of that money that way even before they get to the scams, and there's a lot of scams too. So like generally be very, very cautious. But if you're excited about trying to buy a little bit, I actually think it's pretty reasonable to do at small quantities because you don't need very large quantities if it turns out to matter. Bitcoin is either going to be worth a lot, or it's going to be worth very, very little. And so there's really not a lot of reason to buy a huge chunk of it because all that does is expose you to the short-term movements, which are very dangerously volatile. If you have a small amount, then you're exposed to the upside, and your downside is just limited to however much you put in.
So I just want to say there's a great book, maybe you've read it, called Random Walk Down Wall Street, and they describe one theory of valuation, which is called Castle in the Sky, which basically means, what will the next guy pay? I don't care about what it's actually worth. I only care about what the next guy will pay. Anyways, my question is, in the early days of Bitcoin, one could actually use a general purpose computer to mine, right? And then over time, you had to start using FPGAs, and then ASICs, and then more and more dedicated hardware, right? Isn't that? And so my question to you is, These other cryptocurrencies, are they just sort of earlier in that curve, but is it fundamentally are they fundamentally the same?
So,
Like Dogecoin?
yeah, so there's a lot of other currencies that are built with the same or similar technologies to Bitcoin. They're sort of trying to solve the same problem. Some of them have different feature sets, different things they attempt to do. Some of them are going after specific communities that they're trying to target. Some of them are very serious technological endeavors like Ethereum. And some of them are sort of more kind of joke communities like Dogecoin. You know, I feel like it's important to preface this by saying that I personally am a Bitcoin maximalist, which means that I believe in the long run there will be only one cryptocurrency that matters, and I believe that it will be Bitcoin. That's not necessarily something that everybody believes. There's a wide number of people who believe that there might be multiple cryptocurrencies, and there's a wide number of people who believe that there will be one, but that you can't necessarily know for sure which one it'll be. I happen to think it'll be Bitcoin, so when I tell you about altcoins, you should just take it with a grain of salt because I'm a skeptic. Broadly speaking, many of the challenges that Bitcoin faced, it only faced because it started to matter. A good example of this is regulatory controls. There's no reason to regulate something until it becomes big enough to be worth your time to regulate. A good example of this in the altcoin space is that there's a lot of altcoins that make very strong privacy guarantees, but you can't really know how strong the privacy guarantees are until there's like significant incentive to break them because they're untested. So as of right now, there are things which seem to be private. I don't have any specific reason to believe they're not, but I also don't have any specific reason to trust them. If I needed a secret that was very secret, I wouldn't necessarily be sure that that system had been tested. One of the things that Bitcoin has going for it is simplicity, and that simplicity means that the things that it does, you can be reasonably sure that it does in a predictable way. You can contrast that with, say, Ethereum, which is a very flexible, very powerful system that can do very interesting things, but many of the interesting things that it can do are bad, which is why you get things like the parity hack or the parity bug or the DAO hack, which caused like hundreds of millions of dollars of Ethereum to be lost through sort of esoteric bugs and exploits in the Ethereum ecosystem. So simplicity can be an advantage in this case. I happen to think that it's very difficult to be important, but very easy to be unimportant. And so many cryptos find it easy to enter the space. Relatively few of them find it easy to climb. Each crypto has its own story about why it's different, and I could give you for each of them my story about why I don't believe their story. But I think in general, the thing that I would say is, if it's not Bitcoin, then why would it be the immediate successor? Like, I can make an argument for why Bitcoin will win, but I can't make an argument for why something that could topple Bitcoin would itself be untoppable. And at that point, you're sort of building everything on a house of cards. It's very hard to inspire the trust that you need. I'm going to let a few other people ask some questions too. It's very hard to inspire the trust that you need in order to build a crypto ecosystem.
So I'm not exactly sure what you mean by Bitcoin will win. Would it replace cash? Would it replace money?
It's a great question, yeah. So what does it mean if Bitcoin wins? Well, in my mind, what Bitcoin winning means is that everybody thinks that Bitcoin is a valuable thing that you would want to have. You know, when you talk about gold, if I walked up to you on the street and offered you a gold bar, you'd be like, sweet, that's awesome. But if I walked up to a random person on the street and offered them a Bitcoin, a decent chunk of people would be like, why? Are you going to hack me? What's that? And I think of winning as being a world where we all view Bitcoin as being valuable. As far as like what use cases that might entail, I think it's a bit like trying to project what email will be used for by measuring physical mail. I think the things that Bitcoin will unlock will be new and different and very hard to predict. I certainly think it will occupy some spaces in the use cases that we see today. There's an interesting essay online called An Institutional Investor's Take on Crypto Assets, where he makes an argument for what he thinks the use case of Bitcoin will be in practice. TLDR, he believes it would be useful as a reserve currency. So for the same central banks that hold US dollars as a way of sort of controlling their own currency's value, they, by holding US dollars, give quite a bit of political control and authority to the US government. They might potentially be interested in diversifying those holdings across other things that are neutral. They already do that with things like gold and oil. So if we believed that everyone valued Bitcoin, you could imagine that Bitcoin might be useful as a neutral source of value in that way as well.
And the other question is related to private keys. So if I get your private key, you know, I get your Bitcoin.
Please don't, but yeah.
So that's the question, you know, like storing these private keys. Now the question comes about the central space to store them, because you're talking about scalability of, you know, cyber security and all that, and like, should I invest in cybersecurity? Can someone hack me? So if I have a central authority storing these private keys, then, how are we different?
Well, there's a difference between disintermediating central banks and disintermediating banks. So if there's only 21 million Bitcoin, but it's easier to store them in Coinbase, there's still only 21 million Bitcoin. And if Coinbase starts to tell you they want to inflate the supply of Bitcoin, then you can go to Gemini or you can go to Robinhood and you can take your business elsewhere. So even in a world where it isn't feasible for you individually to manage your Bitcoin, it still matters for Bitcoin to be decentralized. In practice, I think it is totally feasible to manage your own Bitcoin. I think the biggest risk is you're replacing trusting your bank's security with trusting your own security. So depending on how good your computer security is and depending on how much value you're talking about transacting in, it may or may not make sense for you to manage it yourself. An analogy would be you keep some cash in your wallet, you keep most of your money in the bank. That's because it doesn't make sense to carry around most of your wealth in your wallet. You're going to have similar policies with the Bitcoin that you store. There will be less convenient, more protected spaces, some of which you'll control, some of which banks will control. And then there will be more convenient, less protected spaces like your smartphone or your laptop where you keep like petty cash to make simple purchases with. Yeah. So is it a problem that Bitcoin is not necessarily the fastest crypto at this point and that it's one of the more expensive ones? Yeah, totally. There's many people who would give you a very different answer to the one I'm about to give you. So I'm going to give you an answer with a fair amount of confidence because I believe it, but I also want you to believe that other people believe differently. I don't think it's possible to die because of high fees. I think it's like saying that nobody lives in New York because the traffic is too bad. It's like the high fees are a direct consequence of how many people consider it to be valuable to transact on the Bitcoin network. If it wasn't valuable, then people would pay less for it, and as a result, it would drop in price. So it's kind of a self-correcting problem. Like, it is the price that it costs because that's the value that it provides. Now, I do think we'll build technologies like the Lightning Network that will make it easier to make more efficient use of the block space. So I think that fees will go down and that transaction times will go down as well. But I don't think it's the kind of thing that could ever be a fatal flaw because it's like losing from your own popularity. What I think is happening is that we're sort of understanding, there's two basic use cases that you could target when you're trying to be the next big currency. You could target medium of exchange. You can make it easy to give each other money very cheaply and quickly, or you can target store of value, make it a very confident place to park your money, even if it's a pain in the ass to take in and out. And at least as of current market prices, it seems like the market appreciates Bitcoin prioritizing store of value over other possible considerations. There are some altcoins that are very specifically targeting cheap transactions. In my opinion, one of the reasons that that doesn't make sense is because transactions are cheap when no one's making them. So it's sort of like saying, come to my club because there's plenty of space. It's like only true until it becomes successful, and then you will defeat yourself. If your claim to success is that you will have low fees, then you can never achieve a certain level of saturation, so it's sort of self-limiting. But there are many people who would tell you the opposite. There are many people who would tell you that the most important thing is to go hurtling forwards to adoption as quickly as you can, and then figure out store of value later. I think it's easier to go in the other direction myself.
What was the source for the slide on the top 0.11 and 10%?
This guy.
So my question is, if Bitcoin is like a fixed amount, so there's like 28 million or whatever in existence.
21.
But fiat can be created by any government. So how can those numbers be in effect, 5 to 10 years from now?
They can't. Those numbers are for today. Yeah, I've refreshed the price this morning. I refresh that slide every day. For every day I give the talk.
Those numbers are from extrapolating like the amount of money in existence for each.
It's assuming that all 7 billion people have a desire to hold Bitcoin, and that they will hold them with a Gini coefficient, which is a way of measuring inequality that's roughly proportional to the Gini coefficient for income inequality for those 3 countries. So it's a bit of a hand-wavy thing. Don't take it too literally. It's mainly just a way of sort of demonstrating that Bitcoin is still so early. If it turns out to matter at the scale that say gold matters or that fiat currency matters, then any amount of money that you put in it today will end up mattering a lot down the road. Yeah. So what's the difference between Bitcoin and Bitcoin Cash? So, back in my slide about what the blockchain actually looked like, I kind of didn't discuss this, but there's these sort of gray blocks that happen, right? And the way that that happens is if you and I find a block at the same time and we don't know about each other's block, and then we rush out to the room to announce that we found a block, whoever beats the other, that will become the real block. That'll be the one everybody starts building off of. And then, like, let's say my block doesn't get there in time, your block gets there faster, mine will be dead. And that's what's called an orphan or a fork. Now, most of the time, forks are just natural statistical occurrences because we're both just trying to do this at random. So sometimes it'll happen pretty close to the same time, and that's just natural. But another possible reason for a fork is if you and I have different rules about how Bitcoin could operate. So earlier you were asking about, like, could someone just make it 22 million instead of 21 million? If they did, it would be a fork. So you would create a rule set that says, like, here's the rule set I'm enforcing. And then anybody else who cared to accept your rule set or who cared to enforce it along with you could upgrade to whatever rules you were enforcing. Now, the folks who did Bitcoin Cash were among the set of people that I was talking about who feel strongly that medium of exchange is the most important use case and are targeting cheap transactions. They specifically were of the belief that the size of the block in the blockchain, which is sort of an esoteric limit, was choking off traffic and choking off adoption. So they wanted to increase the size of the block. For various reasons, that makes it harder to be a miner. So if your primary concern isn't low fees, but ease of mining, because that's what makes Bitcoin permissionless, then that's a bad trade-off. But if your primary concern is low fees, then that's a good trade-off because it will lower fees. So they made a version of Bitcoin that had 8 megabyte blocks instead of 1 megabyte blocks. And then they sort of advertised to everyone that if you believed that the real reason for Bitcoin was low fees, then you should come consider Bitcoin Cash the real Bitcoin, which is sort of their value premise. Everyone who had Bitcoin before that fork and who kept it in an address, they now have both Bitcoin and Bitcoin Cash because basically all of the history back here is shared between both of the currencies. So you can think of it as Bitcoin Cash kind of took a snapshot of Bitcoin one day and said, like, this is the beginning of time, and then they started their own direction and ignored what the original Bitcoin was continuing to do. Another way to think about it is that they kind of like snuck into everyone's vaults and like emptied their pennies into it, and then now everybody owns Bitcoin Cash without necessarily having decided to own it or not. So there have been many attempts at forks since then. There's been Bitcoin Super and Bitcoin Gold and Bitcoin Diamond and Bitcoin Ultimate and probably even dumber sounding ones that I haven't heard about. There's also been some other airdrops that happened earlier that operated in similar or different ways. My favorite is clams. The interesting thing to note about these forks, in my opinion, is that they kind of demonstrate to me why I think Bitcoin is the only crypto that matters. So when cryptos compete with each other, there's sort of two things that make a cryptocurrency. One is the kind of the body of code, the technology, the set of rules that enforce what it is, you know, the kind of code itself. And then the other is the ledger, the history, the network of people who think that it's valuable and who value it. And so you've got like the community and the code. And in order to be a cryptocurrency, you have to be decentralized, which means that your code has to be open source. Everyone has to have access to it, which means that everyone can fork your code and create their own copy of it that works in their own way, which means you're constantly competing against sort of variations of yourself. So the existence of Hypecoin implies that I, as an enterprising developer, could take Hypecoin's new feature and apply it to Bitcoin's network and ecosystem and say, look, everybody, now I've got Hypecoin Bitcoin, and everyone will consider Hypecoin Bitcoin to be the best possible cryptocurrency, and then that will become the cryptocurrency. You can't compete on technology because you're giving it away. You can only compete on network, and that's why I think Bitcoin matters the most. And you can see that, like, in the top 10 cryptos at any given time, like 3 of them are forks of Bitcoin, even though 2 of those forks of Bitcoin are actually like strictly technologically less upgraded, and Bitcoin itself is, from a technological perspective, pretty primitive. It's the first one in the space, and it hasn't been significantly upgraded. So what that tells you is technology isn't the thing driving the value. That the principal thing driving the value is the ecosystem, the community. And I think if somebody comes up with the next killer cryptocurrency feature or app or whatever, that they're likely to think of forking Bitcoin as more efficient than competing with it.
Oh, it's a question. So I think you just answered the first one, was that a fork is effectively a new cryptocurrency with rules that pretty much everybody understands. In other words, they're very familiar with Bitcoin, so Bitcoin Cash isn't, it's like 8 megabyte blocks versus...
I think the more important thing is that people own it. So it's a way of jump-starting how many people. Like if I started Tyler Coin, then all of you guys would be like, who cares? But if I started Tyler Coin and I had 1 million users, then you'd be like, well, now that's an actual thing. So by forking off of Bitcoin, you're sort of co-opting the Bitcoin community and claiming them as your own.
And the second question was, do you think Bitcoin will be relevant, say, 100 years from now after all Bitcoins have been mined?
Yes, I do. In the event that Bitcoin matters at all, it will definitely continue. In fact, we've already had a couple of blocks where transaction fees outweighed the block reward. It hasn't happened very frequently, but it has happened, and we're still very early in the ecosystem. So in my opinion, if Bitcoin matters, it will be able to pay for itself. That's to be determined, so that's just one man's guess, but I feel fairly good about that particular risk.
Okay, so at the beginning of the presentation, you had said that we don't have too many things that run on scarcity, and then this is something special because we have only 21 million. Something that I'm not able to understand is why is it special if we have only 21 million? What happens if all the 21 million are mined or whatever? So I'm not able to visualize that scenario. Right now, you said we are close to 18 million.
Yeah, so when we've mined all 21 million, it's not like we'll run out. We'll just be using the same ones with each other. So there won't be any sort of like hard wall that we hit. The reason that it's interesting to have there be scarcity is because it makes things count. You can only store value in something scarce. So like you can store value in gold because I can't turn lead into gold. If we could generate gold easily, then gold would be worthless, which is what happened to aluminum. It used to be very valuable, and then it became very easy to produce, and now it's very cheap. And so the fundamental value that is accruing to gold is because of its scarcity. We're basically using it as a shorthand for, I did a bunch of work that was valuable, but I don't want to trade it for anything yet. I want to trade it for something in the future. I'm going to park it in gold as a way of storing that value over time. And so scarcity is how stored value can be preserved, because if the supply increased, then your value would be diminished.
So are we guessing that once all the 21 million are mined, the price will stabilize or something like that?
Well, the price is a function of demand, and the demand actually takes into account the future supply, or at least it should if it's being sort of rational, which who knows how rational human beings actually are. But in theory, when you're buying now, you can say to yourself, like, I know there will be 21 million, so I can plan for it today. I don't have to wait for them to be produced before I calculate that into my value, whatever I think Bitcoin is worth. So Bitcoin is worth however much people are willing to spend buying Bitcoin divided by 21 million, minus some amount for however much you think is lost or frozen or whatever. And so however much people are willing to buy on Bitcoin is a number that no one can tell you for sure. And it's not necessarily a number that should stop changing when Bitcoin stops being mined. Like if Bitcoin turns out to be useful as a way of storing value, it's probably going to be useful both the day before we run out of new Bitcoin and the day after. There's nothing about new Bitcoin that are special. It's just a way of sort of bootstrapping the system, because in the early days, there wasn't enough people using the network to pay the miners. But over the course of, I think it's 140 years before we run out of Bitcoin, over the course of that length of time, we should have enough people using the ecosystem that it's self-sustaining. And like I said, we're actually really close to that now. So if you imagine like a plane on a runway, we're like hopping up and down off the runway right now. And we've got another 140 years to go. So we should find enough transaction fees to keep paying the miners. Whether or not we continue to care about Bitcoin is a different question.
So all of this is like one of the factors community acceptance, right? So if a lot of people like it, whatever coin it is, to be famous, then there's a limited number, and then drive the price up.
Yep.
Now, I think of it as like, what if Facebook had Facebook coin, and somehow they convince 1.2 billion people using Facebook daily that their coin is the most valuable thing, and that Bitcoin is.
Yeah.
Because they can basically generate similar technology, right?
Totally.
So, yeah, what do you think about like community? Like, Bitcoin is very well established community. What if there is other competing communities such as Facebook users, Twitter users?
It's a great question. I'm going to clarify a thing that I don't think you meant, just because I do want to make sure that everybody gets it, but I don't think you meant it. There's a thing that a lot of cryptocurrencies, especially new ones, like to do, where they sort of like to imply that their crypto is kind of like shares in their company. It's not. It's not at all. And if it was, it would be illegal. So to the extent that you think of yourself as like buying shares of a company when you're buying a crypto, don't do that thing. It is not the right way to think about crypto. But I know that's not what you were asking. What you were asking was, what if a large community, especially a community that has sort of like a strong ability to move quickly like Facebook, was to decide to create a competing currency and then sort of instantly have a much larger community than Bitcoin? And it's a good question, and there are people who are worried about exactly that. In fact, there's a fair number of people who believe that the community that matters is the business community, and that they're pursuing the ability to sort of like appease the banks. I don't think it matters, and here's why I think it doesn't matter. Ultimately, there's one thing that Facebook coin could never do, which is be decentralized, which is the one thing that Bitcoin does. So you could totally go and, as Facebook, you could make an altcoin and you could call it Facebook coin and you could market it to all of your users, but it would be fundamentally no different from just having Facebook tokens that were run on the Facebook server. Like, it would be ultimately controlled by Facebook shareholders and by Mark Zuckerberg, and it has sort of all of the problems that you would expect from a thing that's centrally controlled. One problem is that users probably don't want their money to be controlled by Mark Zuckerberg. Most people are not super stoked about Facebook's power already. But another problem is that anytime a private company has attempted to do this, and there have been people who have created private currencies, Liberty Reserve was one, there's been a couple of others, the government comes knocking on their door and says, hey, we've actually got a monopoly on the creation of currency, so stop it. And they will shut you down. Many of them are illegal, yes. Many ICOs are operating in super sketchy areas, and I suspect there will be a great reckoning sometime in the next couple years. And in fact, the SEC has kind of like been saber rattling about it.
So how does utility token work in ICO?
I don't believe in the value of utility tokens. I think they're interesting, but I don't think they're valuable. The reason that I don't think they're so a utility token is a token that allows you to buy service from a decentralized network. So I think the easiest one to imagine is MadeSafe. MadeSafe is a decentralized storage network. You allow people to store stuff on your spare storage. They pay you a small amount. If you want to store your stuff somewhere, you pay them a small amount in this token. The reason that I don't think it's an interesting investment, even if it's an interesting technology, is because it's decentralized, which means anybody can fork it, which means to the extent that you're accruing value in the token itself, someone will fork it and make a cheaper one and then use that. Because from their perspective, they have no reason to be paying you rent, and they can create a perfectly competing system that works just as well. So your utility token is effectively like, it's like a gift card for a shop in a perfectly competitive market. It's not necessarily worthless, but it's not what I would consider an investment. I don't think it will accrue value, except to the extent that other people end up thinking that it will accrue value, and then maybe you can play a greater fool's game. But that's why I don't value Ethereum personally. It's why I don't value MadeSafe. It's why I don't value Augur. It's why I don't value MakerCoin. And if you want a more long form of that argument, an institutional investor's take on crypto assets is a really good description of why I think that's the case.
The question was more like, what is a utility token? How does it relate to the blockchain, and especially to the Bitcoin?
Yeah, a utility token is basically a blockchain that has a specific use case in mind. So in the case of Ethereum, the utility is the ability to run smart contracts on the Ethereum computer. In the case of MadeSafe, it's the ability to store files on the decentralized network. Think of it as like the decentralized nature of the blockchain, but instead of being used to store account values, it's used to do other things. And the other things might vary depending on the coin. It is a blockchain or a blockchain-like piece of technology. There are some other data structures that are a little more modern. So I think right now, blockchain space is like super expensive. And so really, there aren't a lot of practical reasons to store data on the blockchain except transactions in Bitcoin or messages to your wife about how great she is. It's like the most expensive place you could possibly store data. And that kind of makes sense if you think about it, because the way the blockchain works is it's being replicated in every single computer that's running the Bitcoin network. So it's a very inefficient way to store data. What I think will eventually be useful or interesting is that we'll build layers of technology on top of Bitcoin that sort of leave behind these like very lightweight checkpoints that allow us to build trust in sort of more distributed systems, which is like a very hand-wavy product manager way of saying that I think we'll get better at using that space more efficiently. I think it will get cheaper. In a world where it gets cheaper, in a world where we can store space very freely, there's a lot of interesting stuff you could imagine doing. You could imagine storing the provenance of art. You could imagine storing land records. You could imagine storing like the records for where goods or food or materials were sourced, so that you could be sure you weren't buying blood diamonds, or that you were buying fair trade coffee, or that you had bought rainforest safe wood, any of these things. All of these sort of places where you want a record of history that you can be confident that no one has trifled with. the blockchain can do that. The way that it's doing it today is too expensive to do at scale. But if we get better at doing it more efficiently, I believe that we'll be able to do many of these things in a more permanent way. And so in much the same way that the invention of writing kind of like created a whole world of commerce because now we could remember because something had been written down and we could be sure. And in fact, early contracts, what they would do is they would write the contract on two halves of a stick and then break the stick, and then you could fit the two halves together, and that's how you know that both people still had the same contract that they both had copies of. So we've been trying to create this notion of like shared truth since the days when we were bartering with broken sticks. And this is a technology that allows us to do it in a cryptographically sound way. And I suspect it will end up being the foundation of some really cool new social structures. Yeah, so like how do you come to trust the Bitcoin code, basically? Yeah, the answer is yes. It's not a super satisfying answer, but yes. Because it's open source, that's how the trust is founded. And what it basically looks like is a couple of cryptographic experts review it, and then they're like, damn, this really works. And then they go and tell their friends, and their friends are like, I don't believe you. And they spend hours and hours and hours at whiteboards and sort of explain it, and eventually their friends are like, wow, I never would have figured that out, but now I believe you. And that's the tier that I'm in. And then I go out and tell a whole bunch of my friends where I'm like, this totally works. And many of them are like, I don't really have the time or the interest to go understand it, but I know Tyler well enough to know that if he says it works, it's probably true. So then they trust it. And then they go tell their friends who don't really know about anything, but just sort of go with the flow, and then they trust it even though they probably shouldn't. And so the chain of trust is all ultimately going back to people who are reviewing the code directly. But in order to guarantee whatever level of trust you want out of the system, you might have to go back and review it yourself. Like if you want the true promise of Bitcoin, the true, like I've trusted no one, and you have to learn to read C++, and you have to learn cryptography, and you have to go read the source code yourself. But there are people who are that level of paranoid who are doing it and who are coming away and being like, wow, I'm going to go buy some Bitcoins.